So the first thing we do at PMP in the morning, the pre-market prep, is come up with a title. And I was thinking about the 1969 Led Zeppelin song, Ramble On, but we're not really rambling. We're moving on from the Nvidia earnings, folks. It's over. It's done. Much less than the expected move. We'll talk about the earnings. We'll talk about the breakdown of earnings, which Mitch detailed yesterday. The price action kind of muted. There are other earnings out there. There are other stocks moving. And we got to have Mish Schneider come on at 8:35 to talk about the Modern Family. Got a special treat for you guys on this Thursday. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we're green. They bought the dip up two handles, just hanging out at that critical 6,500 level. The buck pulling back down 27 cents, 97.86. TLT just hanging out here. Can't really make a move, up 20 cents, 86.85. USO peeling back just 39 cents, 74.29. Gold and silver looking perky. GLD up 47 cents at 313.18. SLV tacking on over 1%, up 41 cents, 35.40. And Bitcoin, you can't keep it down here, bouncing off the 110K level, up $1,500 at 113,500. So who do we have lurking in the background? None other than Triple D. Welcome back, Triple D.
Back.
So you guys got to make up for 3 days of picking on him.
I know. That's what's got to happen here. And you know what? It's been probably pretty easy on you because I haven't picked on Joel for 3 days here either. So it's got to be pretty easy on you the last few days without me there. But I'm back. You know what? Oh, Brent's chiming in here.
Let's catch up on that making fun of Joel. Here we go.
Here we go. What are we going to say about Joel?
I don't need to talk.
It was a nice article. Like the article I tweeted out, Jewish Times with the gold medals. I'm like, I was actually shocked, that you slipped down into the 60 to 64 group, though. That was pretty sneaky. The 80-year-old beating the 60 and 64-year-olds in the gold medals there. But congratulations, Joel. If you didn't see the article, he took 2 gold medals in the National Senior Swimming Olympics.
Yep.
Joel Elconin. So hot right now.
Yeah, it was fun. Yep, and there we go. I mean, that was fun. I let you tweet it out. The servers they burnt down over at the Jewish News.
They were over. That's what
I guess there was a lot of women, going over and checking it out and stuff. So,
yeah, they were like, look at that guy in that Speedo. We like this guy.
No, they didn't put that
80-year-old
picture
in
in.
the Speedo.
Didn't want to.
All right, we can't pick on you all day. We're moving on. We're moving on.
Where you been,
I'm back
man?
here. There was a few health hiccups, but I'm good here now. So we're no worries. Back in the fold, trying to get back in the seat, and they throw me right into the hot seat last night with Nvidia earnings here. Joel's gone. He's going to have a drink because he knows I'm going to have a 20-minute rant. No rant yet. I have not wound up yet. I'm just getting warmed up here. So no rant yet. Don't leave me. Nvidia earnings last night were good. $1.05 versus $1.01, 46.7 billion versus 46.01 billion, which is a nice beat. Adjusted gap to exclude H20 related charges, $1.04 versus $1.01. So they beat, all around beat. The guidance was good to do a $60 billion buyback. So why is the stock down? Well, it's the bar. It had run a long ways into it, and people are really concerned. So when you're sitting there and you don't have access to your systems and you're just scrolling the mindless scroll on Twitter to try to get all your news, you really get a feel for what the retail trader is thinking. And they were spooked. A lot of people thought that Nvidia was going to tank on this earnings report. And then there was a few people saying, no, it's going to be over 200. I'm like, you know what? I'm going to take the other side on all of those trades and say that Nvidia reports, beats, but doesn't really do much. Stays within the expected move is what I tweeted out. Stays within the expected move and basically trades sideways for the rest of the week. Well, with a 12-point expected move, that trade is working out here only 2 points down. So the sideways trade in Nvidia is working, and the buy the dippers, Joel, have emerged from last night. There's underneath demand in every AI stock. You get a dip on Nvidia on decent earnings, and of course they come in to buy the dip. It got down to 172 last night, already back to 179. The bears are like, what's up? The thing's, really expensive. And, well, they used to say it's 100 times earnings, but they were all wrong when the stock was 40. They were saying that's 180, and it's not even close to that because we knew the growth was coming up. Growth is still there. There's obviously a few, little, hairs on the report, call it. But overall, decent report, stock bouncing back.
All right, we had an excellent preview yesterday, a graphical preview by Money Mitch. He's going to hop on the stage. He was talking about the China. Mitch, come to the stage, give your fundamental outlook. I'll do some technicals, and then we'll move on.
What's going on, Triple D? It's good to see you here.
It's good to see you too, buddy. And thanks for filling in. We had Money Mitch always does a fabulous job, so I knew you were in good hands.
Yeah, I brought some fundamentals. I know that there's not too many people that talk about those anymore, but we were pointing yesterday all about China, and that was going to be the focus of the earning talk. And what happened? Well, guess what? They talked a whole bunch about China, guys. So you guys can see the graphical representation here. And what happened? Well, no H220 shipments to China. That's what's hurting here. Of course, we've all heard about the 15% export tax. And whether it's legal or not, the White House is still working through that right now. And that's actually holding back NVIDIA's ability to ship these chips out. So as just the speculation I'll put out there, watch to see if maybe Trump makes a comment about this specifically today. So, of course, we'll be truth watching out there. But I think the important part was the numbers that they gave you. You guys remember AMD gave you a specific number also. They're giving you a drag here. NVIDIA had already taken a $4.5 billion write down related to the H20, and estimates could have been here that they add $8 billion in Q2 sales if it been available. So you guys can see the visual representation here, and green is China's revenue, the blue US revenue. Well, this 2.77 billion this quarter went down from 5.5 last quarter, and that you could just add an 8.0 on that. So imagine where that could get to, right? So then now we're talking now $10.8 billion is the upside scenario here if they get these chips sold. So instead of being 12% of the revenue, it could be close to 50% of the US revenue, right? And so that's what you're looking for. The growth is going to come to NVIDIA. It's probably no longer the US growth. It's still growing, but not massively, right? We're only going up about, maybe you can say
it went up still pretty good, but it's a great point you're making. The future for NVIDIA growth might be linked to China here. So you got to watch the tariff talks, the Trump talk. You know, if you get green light go that, okay, let's sell these things to China, you could see the revenue explode here in NVIDIA. So there is still actually upside here. Like you were saying, this quarter was okay, but it would have been awesome if they would have been able to sell those chips.
Yeah, even if they have to pay 15% tax, they don't care. It's $8 billion, right? And then when you look at the margins, we talked about this yesterday, where the margin's going to continue coming down. That was also a major concern. They bounced back 72%. As long as they're above 70%, they're looking really, really good on the margins on this business, because just think about it. It's 72%. That is massive. But that's like
insane.
That's what you get in retail, right? Like when you're selling like kind of things at the gas station, not what you would expect on these expensive chips.
Like software is always higher and chips are higher, but 72% is just so they keep saying that margin is going to come in. It's going to come in, but it really hasn't.
It bounced back.
Actually that was expand even more.
That's incredible. The most positive thing I think I see on this report. Like actual positive, it's this right here. Of course, China is like a future outlook, but it's a positive one. So I think that you're seeing the data center growth, right? Data center continued to grow. Yes. Overall revenues continuing to grow, margins improvement, and potential for more money on the line for NVIDIA. What else could you be asking for?
Fantastic analysis, Money Mitch. So quick question here. Would you be a buyer of the Nvidia dip, although the dip's already gone here? But what are your thoughts here for, the last quarter as we enter obviously, coming into the third quarter and the fourth quarter here?
You just got to stick with the favorites right now. It's been AVGO, it's been Nvidia, and it's been AMD.
Hard to bet against
I think you just have that 3-0. That 3-0 is just, it's unbeatable right now. And I think that, you can go elsewhere looking for return, but these are the best of breed right now. And I wouldn't fight any of these on the short side. I'd just be looking at to see which one can outperform here. I'm leaning still AMD, but of course, best of breed Nvidia, and then AVGO is not far behind.
Yeah, the only company that has better margins than Nvidia is Build-A-Bear. Just Spinner's talking the thing. I know personally, I've told that story before where my kid goes in the store and it's a $45 teddy bear, and that was pre-COVID. They're probably like $100 teddy bears here now. You got $5 in material and you send that thing out 100. They sell like 25 of those things and they beat earnings. So that's the only company that actually is better. That's a joke because I'm sure the margins aren't that high, but holy crap. But and it's fantastic analysis. What do you think quickly about Dell tonight? Because we're going to get Dell's earnings here, Money Mitch. And this obviously, we talked about this being, the AI, the value AI trade. I've talked about it for a long time here. I've also talked about Dell being best of breed over SMCI. SMCI did not do great last quarter. Does Dell do better? Thoughts? Dell.
Yes. And it's just a matter of, you want to be at a place where you don't have to worry about what could come down the line, right? I would stick with Dell. It's you just learn over your time, right? You don't deal with anything that has some scary insight on the long run. But I did want to just point to financials really quickly here. Gross profit.
Oh, you're looking at the margins of Build-A-Bear. That was a 56%. That is pretty impressive.
56%, man.
Okay, it is impressive.
56%.
Yeah.
All right.
Well, you got the stuffing. What goes into a teddy bear? There's stuffing. There's some cloth. And then some labor. But the labor is even on the kid because the kid goes in and makes his own teddy bear. So you don't have the labor on that.
Margins are taking off at Build-A-Bears, man. They're taking off.
Why did we not come up with Build-A-Bear? We're like, that's like our biggest, like that's right there.
And the money's increasing, so don't
People
short
thought that was. I thought this is a fad. This isn't going to last. Man, these things that you go to the mall, Lululemon store is empty, but Build-A-Bear, there's 2 kids building bears, and that's enough. The margins are there.
Soon they'll have little robots building your bear, but I'm out, team. You guys can check me out like always.
Go higher.
It's good to have Dennis back. That's all I can say.
All right. Oh
thanks, my gosh. I don't even know where to go from this.
You don't want to go into the teddy bear building? No, we're going to stop the teddy bear building.
Let me collect my thoughts so I don't have too many bad jokes. First of all, we should have Build a Bull. We don't
need to build a bull. We need to build a bear, actually.
Okay.
So we should go long, build a bear, because this market needs a case for the bearishness. It is so bullish out there, Joel. Is so, especially after Nvidia, like you said, moving on. The bears were clinging to this. They were like clinging to, Nvidia is going to disappoint.
Kill the market.
And it's going to bring the whole market down. The S&Ps are going to tank. We're buying our puts because this is the end of the bull market. Well, you know what? That catalyst for the bears just set sail. So what's the catalyst for the bears going forward? I still struggle to see it. It's why I keep playing all my long strategies. I'm like, I don't see the catalyst for the bears here. Sorry. I do think it's going to get ugly eventually here. But right now, this market doesn't look ahead that far. Is inflation going to be bad next year? Yes, it is. I'm calling it right now. Inflation is going to run rampant. But you know what? That is not right now. That is next year. Who's worrying about next year? We have a YOLO investor and a YOLO trader that's worried about today. How much can I make money today? I don't give a crap about 2026. It's YOLO. I may be dead in 2026. I want to make money today. That's the investor mentality. So they're not worrying about coming in and saying, oh, inflation next year. That's next year's problem. Let's worry about making money this year. We're at all-time highs. You know, the Fed is coming in all dovish eventually here because we got rid of Cook. She's out the door, even though she's fighting, but she's not going to be able to win the fight. She's going to be out the door. Trump's going to win here too. Trump wins everything. He's going to win here as well. He's going to get his Fed governor on there, and they're going to vote, and they're going to lower interest rates multiple times to be the most dovish Fed. That's what's going to lead to the inflation next year is the lower interest rates. But at this point in time, inflation is of least of the market's concerns.
They had some big shoes to fill on the closing print, but boy, we had some fun covering Nvidia. Let's get the charts up there. I was convinced it was out and it was a beat, and Brent was like, "No, it's not out. No, it's not out." And they ran this thing over 183. The anticipatory algo jumpers pumped this thing over 183, and then the report came out, and I'm like, it's a miss. It's a miss. It's a miss. And then, Brent gave us the price action. There were two things we noted. There just seemed to be a sell the report mentality yesterday. There was a couple stocks, of course, Snowflake's an exception, but there were a couple other reports where they came out and Brent's like a beat, slightly raised, and they hit it. So we were thinking, wow, maybe that's just a trend for the day. Secondly, that tight straddle to me at 12 points told me that there were going to be buyers up top and there's going to be sellers down below for that stock to have that. Got the little pop. You didn't get on the upside, and you did not get the expected move on the downside. But
either way, this was the most, 12 points. And I know a lot of people thought that it was going to be really terrible, but you got to just think of the market that we're in. That Nvidia dipped 12 points. It was going to be buyers all over the place on the dip anyway. They could have missed. The thing be down 20 and they buy it back up, and they didn't miss. So hard to, be a put buyer here in this market here. It's hard to be an option buyer, period. But I mean, when you just put the piece of the puzzle together, and again, just taking it back to the macro outlook, I mean, markets are at all-time highs and interest rates are going down. We don't usually see that environment. Think about like 1998 irrational exuberance conversation here when the markets are at all-time highs and the S&P is trading 27 times earnings, and Greenspan with his famous speech, irrational exuberance, and intentionally raising rates to try to slow the market down because they're worried about the wealth effect. There's no talk of that anymore. There's no talk of the wealth effect. Nobody gives a crap. The wealth effect is crazy here. There's been a lot of people that made a lot of money here. The old Fed, Greenspan, must be rolling over and saying, what is going on here? Because, they're not even conversation piece about the wealth effect. This is another part of inflation here too. So, I mean, lots of things add up to inflation later on this year and into next year. But again, this market doesn't care about that. And if you are really worried about inflation, are you going to sit in cash? If you're going to worry about inflation, that's the worst place to be. The cash loses you money. Think about gold. Think about crypto, the digital gold. Think about stocks going up because they do go up in inflationary environments here. So, I mean, just setting up, like the Fed is spelling it out. It's spelled out for you here, folks. Interest rates are going down. I said there wouldn't be interest rate cuts this year. I didn't know we're going to have a witch hunt and get all these Fed governors and get them all dovish. So he's pushed everybody to a point where the Fed is now under Trump control. It is going to be under Trump control. And do you think Trump is going to be raised? You think inflation comes back and they're going to be raising rates? Not if it's under Trump control. They'll be like, oh, it's just a hiccup. Oh, it's just transitory. Oh, it's going to be all that conversation here. And it's not going to be, but it doesn't matter at this point in time. Right now, you got to buy stuff because inflation is coming.
All right, let's see what could change the narrative, though, right? We have all the positive scenarios. We're through. We're moving on. We do have a GDP revision today at 8:30. So, Dennis, you got to get sharp for that. I don't know if it's going to be a market mover. We got PCE tomorrow. Isn't that the Fed's preferred view gauge for inflation? We have that. Monday, I'm giving everyone the day off with pay. But next Friday, next Friday. And Dennis, I'm not paying you for the last 3 days.
I get paid anything.
Yeah, and you didn't submit an out of office request either. But we'll get to the jobs number next Friday. And then it's just the way things are setting up. The CPI on the 11th, I believe the PPI is on the 13th again, and that's all ahead of the Fed meeting. So, everything is pointing toward that September cut. You see where their percentages are. Yeah. But there's other things. Earnings are, retail earnings, they'll come, they'll be up, they'll be big winners, big losers. But we're really set up with all these things, and also let's throw into the mix a quad witch expiration, right? And I don't know if it's too early to talk about sell Rosh Hashanah and buy Yom Kippur, but a lot of different catalysts ahead for the market.
Yeah, lots of different catalysts, but none really imminently bearish here coming here either. So I'm not in the bear camp whatsoever. I think the bears are getting sent back to their caves here once again, with Nvidia not being down 20% today. Snowflake earnings. Let's do 2 or 3. Obviously, we're going to try to get these in before our guest here, who'll be coming up, Mish Schneider, at 8:35. Snowflake reported last night. They were already popping. Snowflake popped the previous night on the MongoDB report. Yes, even from my Twitter, I can see that. MDB had a huge day yesterday.
I was just going to
brought
mention
up
that too.
Snowflake, brought up Datadog, brought up a lot of the software names. Well, Snowflake then has a higher bar because of MongoDB from the previous day, but it does not matter. They come out and they beat 35 cents versus 27 cents. Estimates 1.14 billion versus 1.08 billion. That's a beat on the top. That's a beat on the bottom. Guidance I don't see. I guess it's just a little bit higher here, so guidance was fine. Lots of analysts commenting here this morning. Piper, Needham, JMP, Bernstein, Rosenblatt, all raising their price targets, reiterating their outperforms, coming in and saying, yep, Snowflake. We're going long snow. And I mean, heck, it is August, and I do start getting snow up here in Georgian Bay in October. So why not be long snow?
The MongoDB trade, just to go that, JV Spec in the STN room made one of the bravest long trades I think I've ever seen in my life. I said good luck. He showed the setup, but he ended up after the open, after the shake and bake, after me trying to call several tops in it, he went and and held on to that. That was unbelievable. That's after the fact, Jack. This is above the expected move. We just touched over 230 in the pre-market trading. Currently trading up 25.90. Volatile stocks, so you're going to get some dipping and ripping. But you know what? The next monthly high doesn't come in at 237.72. And after seeing that move in MongoDB yesterday, I am not going to try and call a top in this one. Just the only thing for longs here is you like to see that pre-market high taken out. Pre-market high currently stands at 230.31.
CrowdStrike, the other big report from last night, 93 cents versus 83 cents, 1.16 billion versus 1.14 billion. That's a beat on the top. That's a beat on the bottom. Q3 guidance, 93 to 95 versus 91. Sales just in line. Ooh, not sales in line. They say they raise EPS guidance. It's really slight. So they go from 344 to 356 to 360 to 372. But then they narrowed sales guidance. What does narrow mean? Well, they brought in the range. They were 3.74 billion, 4.8 billion. They just brought in a little bit tighter there. So looking at 4.874 billion estimates. So basically 2026, they kind of just see sales in line to their guidance with EPS slightly ticked higher. Not good enough when your stock trades. Oh gosh, let's go look at what the multiple is on CrowdStrike here now. It is not a cheap stock, folks. Bringing it up, CRWD, PE multiple is, drum roll please, 120 times forward earnings. So like down a little, like so you're making $4. Does that number make sense? Yeah, about 100 times earnings. When your stock's trading 100 times earnings, 100 times earnings, you can't see sales growth start to slow down. And that's why we're leaking here a little bit on CRWD.
They hit it a little bit below the expected move of actually pretty well below the expected move of $22. Took it down to a pre-market low of $387. When you wow, and then you got a pop closer to 420. Oh man,
yeah, the dip buyers just emerge.
Oh
and
yeah,
like, oh.
woo. Yeah. And now, so when you separate yourself this far from the low, which is almost $20, you kind of thinking, man, I don't know if I'm going to get down there. Maybe I should have just put my bid out there at 400 and got peppered and held my breath when it went to 387. But it had come down, and it's been in a decline. It had a consolidation. Now another move lower. I'll have to see how things shake out today. The next real low, as far as the daily levels go, is 386 from April 24th. That coincides with the pre-market low. Let's see if it works its way there over the next couple days. The bottom of yesterday's range, if you're looking for a gap fill, that's up closer to 420 for CrowdStrike.
And then you had a number of earnings reports here this morning. I'm going to just gloss over most of them. You had Dollar General. It's up $6. Does anybody care about Dollar General? Ollie's, Bargain Outlets. I want to do Burlington and Ollie's together because two of these stocks, even DG, they all have something in common here. What do they have in common? That if you're getting squeezed a little bit, if you're seeing, like, oh, I don't know, I'm a little worried about later on in the year, you're not an AI stock, and you're like worried about your job, maybe that AI is going to take your job away, or, you're just, strapped for cash. You shop at the off-price retailers. So Burlington, Discount Store, Ollie's, Dollar General, obviously, as groceries, fairly cheap. So I think these stocks actually still set up, even if we get an inflationary environment in the second half, even if we were getting to a situation where, oh my gosh, that stagflation word in 2026 comes to play, I think these companies still work because these are the discount retailers where people go to get a deal. I mean, you can clearly see, the full price retailers have been slammed, like stuff like Lululemon, where it's like expensive yoga pants, hasn't done as well. Do I think there's a rebound story here? Yeah, I'm still long. I think there's a potential for that. But when you think about setups here, and you think about Ryan Craver, how often we've had him on, and he's called a lot of this just correctly. The TJXs, the Burlingtons, the Ross stores, those stocks still perform. Why? Because people go in there to get a deal. They go in there because they're hurting a little bit. I'm a little tight for fun. I'm going to go back to school shopping, for my kids here. I'm not going to the full department stores and paying full price. I'm going to go into my Burlington and find, the Crocs shoes for half the price. Maybe there's, ugly colors because they're getting discount stuff, but, I don't care. I want my kids just to have a decent pair of shoes, and I don't care about the color. That's what Burlington, Ross, and even Dollar General to a certain extent have in common, is that, that people go in there when they're hurting, and trading down. I think you have a trade down effect too. Like, you always have certain customers that are always shopping there, but you also have people who maybe were shopping a higher stuff and they're a little hurting. They go to these stores. So let's just look at Burlington earnings because it probably tells the story the best. $1.72 versus $1.32, 2.7 billion versus 2.65 billion. That's a big beat on the bottom line here. Guidance is significantly raised, and estimates were at 879.30 and looking 919 to 959. So raising the low end 50 cents here for 2025. They also see Q3 a little bit light actually in Q3. So it's interesting. They're raising full year, but they see a little bit light Q3. Sales guidance though good here as well. BURL still rocking and rolling. Stock up 20 points here in the pre-market, and this stock is a very close, Joel, to an all-time high.
Yeah.
Actually, no, 2021.
No, it's not. No, it got, well, you know how we'd like to come and you like low one number, big numbers, given numbers, and you gave one. I wish I would have put the date on this. Remember when you said 160 in Palantir, and I threw all those stars up there, and they had one day where it got over 160. It popped up to 160. It popped to one. Oh, yeah. You've had 2 days where it's popped over 160. Going to one, now you got a double top 162 corner and come back down. That he was doing that off daily levels. For me, it's all about 300. 300, 300, 300. I know we're trading 300.99. I know the pre-market high is over 305. 3 monthly highs in a row, going back to late 24, early 25, going all the way back to late 22, late 21. Bunch of monthly levels there. Show me a sustained 300 bid for 3-4 sessions, and I'll load up on this thing going to 350. If not, the people have been waiting to sell it at 300 for the last 3 years, could reappear. So keep an eye on that level. 300, major level for Burlington. Is it Burlington Coat Factory, or they changed the name? It's not Burlington Coat Factory.
I call it Burlington Coat Factory. It's Burlington stores now, Joel. They didn't like Coat Factory because they sell more than coats. They're not. Dennis,
you GDP. Got 10 seconds. Pull your markets.
Yeah.
Pull your markets.
Go wide. I'm actually just getting back into the seat. We'll talk about that in a second here. But, I'm trying to ease myself into it for a number of reasons here. But here we go. GDP. Drum roll, please. S&P's moving around so
3.3%.
So wild. Sorry.
GDP 3.3% versus an estimate of 3. This is the second reading for GDP for Q2 GDP. The first reading was 3% even, so we have 0.3 higher. We also got jobless claims for last week, 229,000 versus a 231,000 economist estimate, a little lower than expected. That's rather favorable. Continuing jobless claims also a little better than expected at 1.95 million jobs. Market here, a little higher.
Nothing.
Kind of quiet.
Rant time. Can we go and officially say that nobody gives a crap about GDP anymore? Because if it was too hot, we'd be like, oh my gosh, it's too hot. The Fed's not gonna lower rates, because the economy is too hot. Well, the Fed's lowering rates because Trump's controlling it, so it doesn't matter anymore. So I don't even think GDP too hot is probably a good thing. We're not worried about, the potential for rates not to go down here anymore because Fed's going to be controlled by Trump. So rates are going down, folks. Doesn't matter what the numbers are. They could come with a hot, PPI, CPI next month. They're probably lowering rates anyways. At this point in time, I don't think anything matters. Real GDP here, 3.3 versus 3.1. It's nothing to move the needle. Jobless claim is basically in line. So I don't think anybody cares. It's a big nothing burger.
I think you're right, Triple D. I think you're right.
Well, okay, so let me clarify here. It's a big nothing burger that even if we're hot, they're not going to say, oh my goodness, they're not lowering rates. So, I mean, GDP probably hot is good because it means the economy is still doing good. And we don't care about wealth effect. We don't care about stock. We're not going to, lower rate, or we're not going to keep rates high. So if rates are going down no matter what, you probably want to see hot numbers now because that means everything's humming along.
Yep. Good point.
So I think dips would get bought, and I think they're just by the, and if you came in here, think about the people coming in here right now. Position, oh my gosh, Nvidia. Kramer drinking Pepto-Bismol before the Nvidia report because it was going to be so crazy. No, it wasn't. It wasn't going to be crazy. We predicted that on Twitter, that it was going to be a muted response because, one, you have a lot of dip buyers in there below. And if it ripped higher, that was good news. So, I mean, at a certain point, you just got to say, hey, this market wants to go higher. The S&Ps barely went down, Joel. Even when, well, the S&Ps were down on Nvidia, but they bought it back.
They did.
Rotate themselves back up. Like if you look what's up here this morning, you're like, well, Nvidia's trading down. Nvidia's only down $1 here now, folks. It's come all the way back. But then you look at the value trade. And, we're going to get Mish on here in a second. We can start looking at some other stocks too, obviously, with the modern family. But, I mean, you look in here at my board, and 2/3 of stocks, maybe 3/4 of stocks are trading significantly higher here. Burke, value. Warren's back, baby. He's sitting, like we said, in his bathtub, drinking his 6 Cokes here and just loving this market here because he's back. Value trade is hot again here. And if interest rates are going down imminently, it is good for all your value names, even better because your AI can go up no matter what, but your value can't. Your IWMs can't. So if you are getting interest rates going down in the last quarter here and into September and multiple times this year, those are the stocks that are going to directly benefit. Small caps, biotechs, value stocks, stuff that competes with interest rates. That stuff's all looking good. Look at the IWM breaking out here, Joel. We are on the IWM, which nobody gives any love to, nobody talks to. We are back to the 2024 highs here. We're coming. It's broadening out. How to be bearish? Bring Mish onto this conversation.
You guys, hold on.
I know she's got some thoughts.
Hold on. We got Nvidia ripping here. Nvidia in talks with the U.S. to sell Blackwell AI chip in China. That is a Fox News report. Nvidia just ripped.
He just said this. Where is he? He's not in his seat.
He's not in his seat.
He just called us 15 minutes ago. He's like, what if they allow him to start selling chips? Trump listening to pre-market prep.
Of course he is, Triple D. You got to watch what you say. A little bit more color here. Nvidia's CEO Jensen Huang tells me, this is a reporter from Fox, tells me he's in talks with the Trump administration about selling his better Blackwell AI chip to China, and he's willing to give the U.S. government a cut of those sales. Plus, he wants U.S. tech to be like the U.S. dollar, a global standard. Thank you, Financial Juice, for highlighting that Fox report.
Money Mitch with the call, buddy. There he is. He called us 20 minutes ago. Where do you get this kind of information, these calls that we make? You can go listen to your other shows out there. They make bad calls. We make good calls on this show. We bring in Money Mitch. He gives it to you 20 minutes. He says, what if? What if they start allowing them to sell the chips? 20 minutes later, they do. Holy cow, Trump listening to the show.
The small details, guys. Small details. You can do it too.
Let's get Mish into this conversation because this market rally's broad.
Okay. Mish Schneider, CEO of MarketGauge. Mish, he's been off for 3 days. Okay. So 3 days of market enthusiasm talking is exploding right before your eyes. So I saw you in the background. I saw you with a big smile on your face. And good morning. Always great to have you on. And the lifeblood of this market is rotation. We talk about it. You like the modern family. It breaks things down. We can go into that in more detail. But Mish, welcome to the show. Thanks for joining us.
Thank you. Thank you. It's great to be here. And Dennis, I'm happy to see that you're feeling right up back to yourself.
Yeah, I come back hot. Wound up. Mish, awesome to see you as well. I mean, I've been talking about this market rally broadening out here, and I think you're seeing some of the same stuff here now because obviously, this whole rally has been driven by tech, and everything else is kind of lagged. But that's not the case anymore here, Mish. What are you seeing?
Well, it's so interesting to see the small caps.
Yeah.
That, basically emerged from the dead. And retail, my granny retail, right, Joel? We've talked about granny retail as the indicator for the market. And in spite of everything, even though still super far from the all-time high, 104, by the way, was the all-time high in 2021, and it's trading at around 86. So we still have a long way to go to say the consumer is completely in charge again of the US economy. But it doesn't really matter because all we really need to see is that something that might be an overall weak link doesn't become an anchor. I mean, that's been my big theme right now, is that it doesn't matter what happens in the market. You have to always watch the weak link, but the weak link doesn't necessarily mean bearish unless it really starts to bottom out, like drop like an anchor. And we haven't seen anything like that. So right now, retail's good, small caps. So what does this mean? I mean, from a fundamental standpoint, it means that things are optimistic about the reshoring. Everything about small caps is in the US, right? The US inside sectors, manufacturing, industrial areas, companies that are made in America, produced in America, manufacture in America, make American goods. These are where the optimism is going forward. But even small caps aren't at all-time highs. They are only about 3 or 4% away.
You're getting there.
They're getting there, right? So, there's always the wall of worry, but right now you can't fight the momentum. And it's been a fun market to trade because basically you just get on the tail of anything that's moving. You could trade it actively. If you're into something and it ain't working, just get out and just stick with the things that are moving. I mean, I can't believe that after 40 years of trading, it's that simple, but really it kind of is right now.
Well, bull markets make it simple, Mish. And I mean, we've obviously been through a lot of different types of markets, but when you've got everything just going up, it's like, we remember Portnoy back in 2020 at his dartboard, and he was just throwing darts at random letters. He's like, this is how you make money in the stock market. Get out your dartboard and you throw 3 darts and you take the 3 letters and you go buy that stock. And you know what? It works. And I mean, we're back in that market to a certain extent here again, where everything is just working.
I'm sorry to interrupt you, but I don't want to forget because it's still, for me, like 6:40 in the morning. You said something. So what is the one thing that could stop this trade? You said it before.
I'm trying to find it right now. Geopolitical risk, higher interest rates. No.
Go broader than that. Inflation.
Oh, inflation, yeah.
And not stagflation, because that doesn't even seem to matter right now, because the stag part people think isn't going to hang out too long. That stag will turn into
transitory,
more growth. But it's going to be hyperinflation potential. And I'm not saying it's there, but I'm just saying that is the one thing that I can see that stops this train. So that's why I talk about that trifecta. You know me, I love expressions, modern family, trifecta, all energy, hands on deck, vanity trade. And the reason why I come up with all these expressions is not to sound clever. It's to keep my mind compartmentalized so that I know what to focus on. Otherwise, you could be like totally ADD across the board and trying to buy everything. And that's not a good formula either. So let's go back. Trifecta, right? So what is my trifecta of inflation? Number one is always going to be the relationship between gold and silver, the ratio. And right now, gold is rocking and so is silver. So we're not really seeing a flip where silver starts to really seriously outperform. It certainly has come off from the highs. Last I checked, and this may not even be 100% accurate, but it was around 86, that ratio. If it stops to drop below 80 or below 75, now we're talking 1979 type inflation in terms of the metals. Not happening yet, but still, how could you think that silver around 39 and gold right now looking like it's about to get to new all-time highs isn't somewhat concerning? Second is the dollar, right? So right now the dollar, everybody thought the dollar was going to go back up. No, the dollar is doing exactly the opposite. But is it critical? No, it's still hanging out, over 97 in the DXY. Something to watch. And the third, I know people always look at me like I'm kind of weird when I say this, but I believe in it so wholeheartedly. And that's the price of sugar, more than the fact that coffee's up 30% or cattle's on new all-time high or cocoa is going back up or soybeans or corn or wheat might be bottoming out. That matters, but sugar matters the most because it is a product in everything. It is a product that represents social unrest when people are going for things that are sugary because they can't afford to eat other things. It represents geopolitical stress because it's grown overseas. There's been hoarding of it. And right now, it's trading on the cash about 16.48 last I looked. It gets over 17 cents. And you're looking at cane here. Cane would probably be around 11.15. That starts to look interesting. So the bottom line is, we see the signs, and markets can go up together, commodities and stocks, but it's when one starts to really go nuts. And we haven't seen that yet, but my eyes are always there.
What about oil? Because we're starting to stabilize here too. And this is another thing that people notice first. When oil prices start going up, they notice it at the pumps right away. And then that starts to, get people concerned. Like right now. So, if your gas prices start ticking up, we just had Trump saying that, gas prices are down 50% since he took office, which obviously is not true. But, everybody, he says it there. And, lots of people believe that. Thoughts here on oil, because we are starting to stabilize here a little bit. Do you think oil starts to move higher?
Well, so I was going to just bring up the other thing that you said before I came on the show about, basically Trump gets whatever he wants, which is why we know interest rates are going lower. That was my other expression, by the way. The unloved becomes the love, meaning bonds. All of a sudden we could see that the long bonds, especially is what I like to watch, the TLTs, have the potential to show that we're going to see much lower yields at some point. And oil is the other thing that he keeps talking about. It's going lower, and it's not. So essentially, what I did a little digging when he went over to Saudi Arabia, basically from what I've gathered through the grapevine, what the hell do I know? I just sit here like you guys listening. But still, the point is that supposedly it's the Saudis that are going to keep pumping to help the price of oil go down, which is why he went there and, had all the wonderful time, got the jet, all that other stuff. And I think that's kind of like on one of my shoulders here, is that at what point, if oil goes up, did the Saudis start unleashing? But beside that, we know I live in the state of the Permian Basin, part of it, right? It's New Mexico and Texas. And they're not drilling. They're not the shale Permian Basin is kind of like stopped because nobody wants to drill under $64 a barrel. And that's the smaller companies. The bigger companies under 60 certainly don't want to. So this call for $50 a barrel to me sounds unrealistic unless the oil gets flooded from somewhere else other than the United States. And that's number one. So I actually am watching the $64 level in WTI as a very interesting place. If that holds and then it goes through 68, I think things could get out of control. It's a heavily shorted market. That's number one. Number two is that the all energy hands on deck. I mean, right now, natural gas is probably more of an interest to me than even oil, because that thing is so darn cheap. And yet, I love uranium. Shit. I mean, excuse me. I can't believe I did.
Money Mitch won't like that. He gets his crap. I swear every once in a while. He's like, the YouTube algo. Josh will fix that later.
She'll pay the fine.
But the point is this. We cannot fuel all this AI and data centers. I mean, I know I'm saying things that people have been saying for a while, but I've been saying this for a long time too. With nuclear yet, and coal is hot too. And even though Trump is against solar and wind, solar, I was in solar. I kind of like just scratch because I don't want to exactly what I said in the very beginning. If I'm not making money right away, I just get out. I'm patient. You know, I can actively trade as much as I want. But I'm watching the solar area and the wind. Forget it. I'm not really all that interested because he's obviously been so against the wind. But natural gas is the thing. And we're big producers of natural gas. And at 285 right now is so cheap. So I'm waiting for it to get through 290. And then I'm looking at, I was long Boyle. I got out. I keep probing. I decided I'm not going to trade UNG. I'd rather trade Boyle right now. And Boyle gapped up higher yesterday. I want to watch to see what happens with the future prices. Because if they come in and can get a close over 290, I'll get right back into Boyle. I still think that that's so undervalued. And again, are we talking inflationary areas? No. But, you know, all of this sort of helps. And the Fed saying, oh, okay, you know, 3%, maybe that's our new target for inflation, I also thought was interesting. So, yeah, you put that all together along with copper and silver and steel and everything else. And now DBA, which is the agriculturals, also starting to get a little hot. Put up DBA.
It is.
Yeah.
Look at that. Does that look disinflationary to you? No. Does that look recessionary to you? No. So there's a fine line between what happens when everybody wanting commodity prices to come down. That looks recessionary. You want commodity prices to rise because that's economic growth. And then all of a sudden commodity prices start to rise too much. And that's where you have inflation.
All right. Long before Michael Berry was talking about the vanity trade, someone on pre-market prep was talking about the vanity trade here. So we've had some moves. I think Estee Lauder, one of them, I think Elf had a big day.
Elf had a big day yesterday. Ulta. I mean, how, Joel, Dennis, we were talking about Ulta when it was trading at like $350 a share. Ulta, look at it. I mean, I think it also reported this week. Did it report yesterday or not?
It's reporting actually tonight.
Tonight. So look at 530. I mean, anybody who listened to our show and bought Ulta or even Elf after it reported and sank and then immediately popped right up. And then some of the other ones that I talked about. We talked about New Skin. Do you remember that? That was at like 7, 8. It's over 12 now. That's a decent move, right? Stitch Fix. We talked about that when it was
You did.
It's now at 550. You know, what else am I in from the vanity trade? I'm also looking at so outside of that, but I'm looking at HIMS right now because Eli Lilly obviously also is doing great. I'm still watching Novo Nordisk. I mean, these companies aren't going away, but HIMS is the hot Twitter stock, right? You know, you're going to get everybody when HIMS goes up.
Oh, they love it.
They love it. This is what I'm learning. I'm like, Mish, you know, don't be stupid. Why buy Novo Nordisk and wait for it to hit 60 when it's trading at 55 when you can buy HIMS at 45, 46 if it starts to break out, and it'll be 60 in a day. So I'm watching this. So 45, 46. But the bigger point is what Joel's saying, which is the vanity trade. I cannot stress it enough. Everybody I talk to either is on some form of a diet drug, or, you know, whether they're on Wegovy or they're on Mounjaro or they're on Zepbound, whatever it is, they're on it, or they know somebody on it, and it's changing all their buying habits. They're buying, that's why they're buying beauty stocks. That's why they're buying supplements like New Skin. That's why they're buying AbbVie all of a sudden looks like it.
What about Lululemon?
You know,
could they be getting into their yoga pants?
Well, except that who wants to buy $100 yoga pants?
That's the problem. That's the problem.
Every time I say
like
that,
they're too expensive.
But still, that chart doesn't look bad. But I wouldn't touch Lulu. But look at Urban Outfitters. Put up URBN.
Okay.
Oh, let's come back a long ways.
Yep.
Retail.
Look at that. A little bit different. That's where they're buying their athletic wear from, right there. Yeah, that's
discount athletic wear.
Exactly.
Yep.
So, and then look at like Planet Fitness, PLNT. You know, so because this is a whole new generation, and if these diet drugs get cheaper, which of course, you know, that was the big announcement by Eli Lilly that they were lowering the price, I think, to $4.99 a month. You know, obviously Viking Therapeutics had a disaster with the pill, But that doesn't mean I would discount that in the future. That will happen. But look, did we just put up Planet Fitness? Planet Fit, all these stocks look poised because the thinner America and globally hasn't even really hit that GDP that you said was useless. You're right, it is. But nonetheless, I have read that 6% of the GDP could be added just from the consumer that is now has a new life. Put up Match.com and Bumble. You know, people have argued with me like, oh, those social apps are dead for dating. Nobody dates anymore. Nobody uses those apps. I say BS, because if you are actually in a situation, put up Match looks better, yeah.
Match looks
Okay.
better, really, like a Bumble.
Yep.
I'm not
The girls choose on that one.
Well, Match reported well, but the point is that if you have been home basically trying to hide yourself, and now you want to come out because you're thinner and you feel better about yourself, just watch those commercials. I see them all the time. I watch Hulu because I'm like, you know, I start binging some shows on Hulu. Mostly, though, I'm interested always in the commercials. Now you have Serena Williams doing
Yeah.
yeah, right. I just lost 31 pounds. You know, I feel so much better. You know, this is the kind of thing that you have to keep an eye on. Now, she's obviously not interested in dating, but you know what I'm saying. If just talk to anybody you know that has been taking the diet drugs and ask them, how has your consumerism changed? What are you doing now that you didn't do before? And what are you not doing now? Are you buying fast food? Probably not. Right? Are you buying a lot of alcohol? Probably not. Are you hoping for cannabis to be legal? Definitely, everybody is.
Maybe McDonald's is our short. Maybe we should go and look at McDonald's. I mean, the stock's near the highs here.
You always
Kind of
want to
defensive
go to
keys
McDonald's.
26 times.
Well,
Maybe
look
we
at
should be thinking about selling our McDonald's.
Well, here's the thing is what you're going to find, and this is already happening too, is that a lot of these big box food companies like McDonald's are trying to gear products towards the people on the diet drugs. So they're offering like low carb stuff or, you know, things
Yeah, they're smart.
muscle.
McDonald's people are too smart.
Right. These marketers, they know what's up. They know what's up. They know they're going to lose.
Okay,
Low calorie Big Mac.
Mish, before we let you go, I know you're working on a new project. We had a nice chat yesterday, and we all know about the Modern Family, and Mish is doing something different with the Modern Family. She's putting, and we don't have time to go into all the different people here, and there's some great characters here. But she's working on a project to bring the markets to everybody, like really on a different level, a comedic level, right? And besides her talents in the markets, she's a very talented comedian and a very funny person. So I'm going to throw you on the spot here, okay? And I'm going to go to Granny Retail, right, who loves to go to the mall. This one right here. What is Granny? Did you see the Burlington earnings?
Yeah.
What? Give me your Granny voice. What is Granny saying today about the Burlington earnings?
Well, first of all, let me just say quickly that I have a guy I'm working with now who is in the film and movie industry who's going to be creating AI cartoons out of these. So you can now take my characters and you can animate them using AI. So like, yay, AI, right? So that's number one. Number two is what we're planning to do is do short clips, a lot of the different characters where they have a voice that I've created also that can then be generated AI, and give like 60-second kind of like, hey, Granny, I'm standing at Burlington, you know, oh my God, they just reported really well. And I just want you to know that I'm heading in there. I'm going to throw my cane away. Here's a chart and here's why, you know, the blah, 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 whatever the reason is. And I think here's the chart. I think this is really where I think maybe I would even invest in the stock, you know, that kind of thing. Quick little hits that show the characters moving in the store. We're just starting with this. We haven't finished yet, but the point is to be educational, obviously entertaining, and also to have a way for people to, again, compartmentalize the different important sectors of the market. So that's
important. And the bottom, she's got some good characters here. We've gone over time with Mish Schneider, CEO of MarketGauge. Great. This is a fantastic segment. We'll have Josh send that clip over to you. We really appreciate it. We'll be talking real soon. Mish, thank you very much.
Bye, fellas. Have a great day.
Thanks, Mish.
Great energy. That's what we have here. On top of Triple D's energy, we have energy from Mish Schneider, CEO of MarketGauge. Great follow on Twitter at Market Minute. So, folks, what do we got, Dennis? 5 minutes left.
We've got a little bit of a market rally, like the Nvidia news did pop Nvidia back, and it's funny, it came out the same time as the 830 GDP number there, and we're like, oh, maybe the GDP is good. It wasn't the GDP number, it was the Nvidia that came out at the same time, that news that really popped it back. Nvidia's green, folks. Yeah. Green machine, buy the dip blindly. Just, like blindly buying the dip. No, I can't see. Blindly buying the dip works again. That's the bull market. That's what we're in here right now. And, if you're selling the dip, you are doing it absolutely backwards. Buy the dip, the greatest strategy in the history of the stock market, is working like a charm right now. Why fight it?
All right, 856. Do we want to touch on any ratings? Is there any
win? WYNN getting an upgrade from UBS to buy. This stock has been moving here as of late. I would say they're late to the party, but when you look at the monthlies, you're like, it looks like the party's just getting started here with win. And if this broad market, a rally is broadening out like we think it is, I mean, stocks like Las Vegas Sands and Wynn have definitely underperformed, and they are starting to show a hell of a lot of life here. So, I mean, these moves, in lower interest rates, definitely help Wynn Resorts. Definitely sensitive to interest rates. So that's what we got to start thinking about in the last part of this year, is who likes lower rates? Wynn is in that camp. I will give you a little color on the report here. I didn't read it, so I don't know if I stole any of their stuff, but UBS upgrades Wynn to buy. We raised Macau estimates, upgrade Wynn from buy to buy from neutral, predicated on those higher estimates and a more bullish view of Wynn's AI margin resort. What the heck is their AI margin resort? I have to read more about that. We anticipate Wynn, being the only gaming operator in the UAE, should provide a meaningful head start in capturing loyalty among ultra-high net worth international customers. Flying through it here to the numbers. We believe Wynn could reach steady state in 2029, 2 years ahead of the early 2027 opening, and generate property EBITDA $730 million, about 16% of Wynn's base guidance, and towards the high end of their $500-800 million guide at steady state. Okay, lots of stuff in there that I don't know about, but right now they're bullish. UBS, bottom line, stocks going up. And you know what? Chart's moving.
It is. It's reaching its highest level since 2021. That would be July of 2021. 124.52. You're exceeding that at this time, trading just off the pre-market high. Where are we going to establish a bid in this? Is my question. We'll see how the price action shakes out today. People bought yesterday and the day before and the day before and the day before. Let's see if they're selling into this upgrade or not. But for me, I mean, longer term, if we establish a solid 125 bid here, look good. It'd be good for Wynn Resorts. So here we are at 9 o'clock, and we tomorrow's guest, we're going to bring Tim Quest on early. So get your coffee early. Tim has some things to do. He's coming out at 8:05. We're going to move over to the STN room. We're going to talk. Dennis really wanted to talk about, we didn't get to fit it in, is like, how do you get acclimated to the market when you're gone? When you're as active trader as him, as you're doing this, the lifeblood of the market. What do you do? What do you do to get your mojo back? So we're going to switch over to STN room, folks. And boy, oh boy, it was a fun day. Great to have you back, Dennis. You hardly picked on me. It's just a great show. Thanks, Brent. Also, you, Money Mitch, with his calls on the money, spot on the money with the Nvidia. Watch Unchanged at Nvidia 180, 160.
Stock Trader Network. Let's go.